Well, good morning, ladies and gentlemen, mums and dads, boys and girls. Dan, Dornbush download number 56 with Clivia backgrounds, Toowoomba Carnival of Flowers, $30 million injection to our local economy, 168,000 bed nights over the 10 days.
Wow.
And over 100,000 visitors, of which 40,000 are not from our region. So
that's fantastic, isn't it?
Carnival of Flowers started by the Toowoomba Chamber of Commerce 66 years ago. And look, really important
Where's your badge?
Where's my badge? Where's my little badge? Really important to our region. So, I'd encourage those people. We're still in the second week of Carnival, lots of things to see and do, so make sure you get out there and do that.
It was a great parade this year too, wasn't it?
Top
parade.
It
50 entries?
It was
amazing.
significant. So, the third largest ever.
Wow.
Ever. So, and some nice pickies. If you check out our Facebook feed, you'll see some pictures that Dan took from the clock tower. So it was
great view up there.
Top view up there. And the Chronicle enjoyed the view too. Anyway, we're here talking shares, not Carnival. So, what's going on, Dan? It's a bit of an ordinary week again, but it's been in fact an ordinary month, an ordinary 6 weeks. So,
yeah.
What's doing?
Andrew, if you have a close look at that chart, you'll really see there's a triangle in there now.
The chart of the
chart
All
the All Ords or the ASX 200.
The chart of the All Ords, yep.
Brendan's
onto that one.
You'll see, there's a triangle forming, and we've seen a downtrend. Now this triangle forming, I think it's looking for that last hit out.
We do need that, and I'm not saying I want it, but the reality is we need that cathartic last.
Yep.
Oh bother! It's a family-friendly video. Oh bother! And it drops another 100, 200 points. It flushes out all the sellers, and then all the buyers start coming in. So look, my personal view, 49.28 is the magic number for the All Ords. I think it'll hold 49.28. If it doesn't hold 49.28, it's
maybe 46.
Bit of pain, but I think that's a pretty low probability. I think it'll bounce off that 49.28. There's 16 billion.
It really hasn't wanted to get through 5,000, has it?
No, there's $16 billion worth of dividends coming through to be paid in September, and a lot of that will find its way back into the market. So, anyway, sorry I interrupted you. So you're sort of watching the chart, seeing if it can hold that 5,000.
And really just waiting for the next dip, which I think most people think is coming. So.
Well, I think not so much people think it's coming, but there's a possibility that it could come, But the counter to all that is that we're coming into bank profit reporting season. We're about 45 days away from that, and history shows that 6 weeks out, people madly start buying ANZ, NAB and Westpac to try and capture that dividend, get those franking credits, and given that banks make up, 40% of the index, I'm excluding CommBank because they've already gone say 30% of the index. If we take CommBank out of the mix, I think that could act as a bit of a counterbalance as well. Interesting
Pretty good
times.
Yields in there too, Andrew, isn't there? 6.3 on NAB, about the same on ANZ. So.
Yeah, and look, 2% in a term deposit unfranked, or 6.3 with NAB fully franked.
Yeah.
What are you going to do? So anyway,
I love those term deposits.
So what have you been buying? You'd love the term deposits.
Well, not really been buying much. Interestingly, we've spoken about China a number of times, haven't we? And I found an interesting video on Bloomberg where a fund manager was talking.
We'll put a link in the...
Yeah, we can put a link in for that.
Yep.
Yeah, good idea. But basically what he's saying is China's really now focusing on quality of growth. Not so much the exports. They want this urbanisation to kick on, consumers and to start spending and really increasing consumption there. So whilst he's saying growth's coming off, certainly is, and we all see that, but they're moving away from that easy growth with the exports and now trying to build up the internal growth.
Well, that makes sense.
Oh, it does.
And it's sustainable longer term type of stuff as well.
It's slower, but it's more sustainable.
Yeah, it creates a strong base. So it'll be an interesting
So I think
watch.
China, buy it on dips. There's AMP China Growth Fund, IZZ, the exchange traded fund, or there's a couple of managed funds that I could talk to people about as well. So you're really looking at 5 years though.
Oh, yeah, it's not a short-term trading thing. It's more of a... And again, we said this many times, this is Japan 1960s and 70s all over again, but that was 2 decades.
Yes.
We're not talking 2 weeks.
No,
2
it's
decades.
going to take time.
So you've got to be a little bit patient.
So it'll be slower, but I think it'll be more sustainable growth.
Which is good.
Yeah.
I've been buying, so sort of switching from longer term to more, well, I'd say still maybe a little bit shorter term, shorter than 2 decades. One called National Veterinary Care, NVL is the code, and they recently listed on the stock exchange. They're a mini green cross. If you had to sort of sum them up in one sentence, they're a mini green cross, and a lot of the green cross management have actually shifted across to NVL. They're sitting at about $1.50 odd. The brokers that floated them, Shaw's, James Gerrish, good morning. Basically, $1.68 is their target price over the next 12 months. It's only a sort of, well, started off as a $40 million company, so whatever is it now, at about 60 odd million. They're basically, our view is that they will probably double over the next 2 to 3 years sales, not share price, sales. So there'll be some translation through into the share price. But, you know, if you look at the astronomical growth that Green Cross had, if you've got the same people, and probably the key thing that we're looking at is there's lots of what we call these roll-ups out there at the moment. So in other words, these aggregators going out and buying businesses, small businesses, but sticking them all together and getting those economies of scale around back office and marketing and HR and all that type of stuff. Because there's that demography thing going on. You know, we've got a more mature population. It's harder for people to find buyers. You know, we're seeing it a lot in childcare as well at the moment. So, big demographic shift taking place. So, yeah, certainly NVL is one that people might want to have a bit of a look at as well. Otherwise, Dan?
That space is really starting to get a move on, isn't it? The smaller companies / emerging leader space. So.
And just one last thing, our friend Mr. Glendon, GC1, that we spoke at some length about, it's one of his top picks. As well, so he's quite keen on it, so that gives us a lot of confidence just for those playing at home. Those shares, despite all the noise that's going on in the market, they're still holding around that $1, and the options that around people got, 4 cents. So basically they're up 4% since listing in a share market that's down probably 10%. So
the other thing too, for people that have those, is that he's put out his first monthly report, so you can have a bit of a look at what he spent his money on. But what did he say, still got 12 million or 16 million unspent. So, and
his top holdings, I'm just going from memory here, like Certex was one. What else was
no Capilano in there though. That was interesting.
Yeah, a bit sticky.
Yeah.
I think it's time for us to go.
Yeah. Bye.
Bye-bye.